Hi, this is Greg with your weekly update. Today is February 13th, 2023. So we're halfway through the month, which is interesting that we're starting off on the monthly. I did a little bit of housekeeping. I actually create this on TradingView using their tools, which I'm experimenting now with the full screen. So we'll see if my little picture goes away. But it also gets published to YouTube where I have at Advanced Investors as the YouTube channel. So feel free to poke around in there. I have some fun motorcycle stuff besides just stock stuff too. But mostly just a lot of stock stuff, and I have break them into channels or playlists. I'm sorry. Anyway, if you like and subscribe there, it helps me stay motivated and keep these coming. I draw these charts regardless, so I post them in a few spots. Well, I just keep them myself. Once in a while, I just straight publish a chart, and once in a while, I'd like to share them with chat groups. I'm in a couple now. So anyway, I like to share my ideas, I guess. Of course, this is not trade advice. I'm not a professional investor. I do long trading. I do like to do a little swing trading, especially around stuff like earnings. Not a lot of it. And I do like to do a little bit of day trading. Like we got CPI day coming up on Tuesday. That kind of reminds me maybe we should start with the calendar. So I want to get into it. Let's hit it. Remember, like and subscribe. Give me some thumbs ups and stuff if you wouldn't mind. Um, so first thing I want to do is take a look at our calendar. Oh boy, see, I was already digging into the CPI stuff. Let's just look since I already have it up on the consensus year over year 6.2%. So I've been reading some stuff that says basically if it hits 6.3 or less, the S&P and 500 is going up. Anything above that, it's going down. I don't know if I agree or disagree. They changed all the way that those numbers. It seems like the government numbers, like they don't like them, they just revise them or they change how the weighting is. So it's the data we get, right? So we'll go with it. I'm gonna back up quick. One thing I'll note on the calendar this week, really don't have much going on today. We've got the CPI tomorrow. To me, that's the biggest. There's a business optimism. I watched it. The mortgage stuff. I'm in the real estate investing too, so I like to keep an eye on that. Retail sales is important. Kind of tells us how things are going for the consumer. Empire State Manager. You can see if they're red dots, they're market movers. If they're green, they're worth watching. Again, housing market stuff I'm interested in. We get further into the week, we get into some stuff like jobless claims. Actually, it looks like the morning on Thursday is going to be pretty interesting. Not so much as CPI tomorrow. That's going to be the big one, I think. So that being said, I'll always pop in just to talk about, well, that's more of what happened overnight. This is kind of a sector analysis right now. Fear and greed, I'll say we started this week into the greed side of things. Earnings, not a whole lot this morning that I found interesting. I'm not even talking about the results, just the earnings. Let's see what's after market close. A little bit more stuff. Anyway, you can look at that. I'm not going to do that. I would do that in a separate sharing or a separate video if I do anything. One thing I always look out a couple months on the Fed futures. If you look at their March meeting coming up, you can see, I don't think anything unexpected going on there. I'll note since our last video last week, GDP was revised up basis point from 2.1 to 2.2. Not much, but you got to remember the reading the week before that was 0.7. So we'll get an update on the 15th, which is what, the day after Thanksgiving. So in 2 days, we'll talk more about that. With that being said, let's just jump back into this monthly of the SPY. Um, again, I use the SPY because it's a proxy to the S&P 500. It's an ETF you can actually buy, which I do buy and own. And I'm like I was saying, I'm mostly long when I start buying those kind of ETFs. They rebalance them for you, like it or not, what they do. But if you're putting them in individual funds, I like to use ETFs because they can rebalance those without tax implications. So if they move around whatever's in the ETF, and honestly, there's RSP, some equal weight stuff that I buy as well. So you do have to watch. The S&P 500 is obviously top heavy tech. Okay, I'm getting off kilter here. So what I do see is we always talk about this rooftop. We always back out and say, here's here's our trend up until we hit COVID, which COVID is this giant pullback. Again, these are all monthly bars. So every one of these bars is a month. So we bottomed out, it looks like, March of 20. Actually, we bottomed out. Yeah, March of 20. So I fibbed that back. We rooftopped and peaked. Had a pretty good call on that one. I was kind of impressed with myself. Anyway, so I fibbed it back. So I'm always looking at this 50 and the 618. There's a really good chance this is where it reversed. Interestingly enough, see the white lines, the COVID, pre-COVID trend line. Again, this is going back to 2013, yada yada yada. We got right at it, and then bounced off. Now this blue line, if I remember right, is the 50 period moving average. So that's the 50-month moving average. Notice that's turning up fairly well as also. One thing I'll say is we did close January outside the rooftop pattern, kind of bullish. Then we're halfway through February, so this candle is starting to not be something we want to ignore, right? Being halfway through the month, because it is a shorter month, we're open, and right now you look at the RSI and it's trending a little flat. We're pulling the moving average down. It's not bad, but the MACD looks like it wants to curl up. So to me, the momentum indicators do have some upside to them. Again, I'm just talking momentum indicators. And if we truly did bounce off the 50%, I'm not saying the bottom's in, but it makes me pause. It really does. And I really wish I would have bought more on this dip. I mean, how often do we say stuff like that? Anyway, I'm going to keep moving. Drop down into the weekly because this is a weekly update. I will be linking the video to literally last week's individual charts I posted, because you can kind of hit the play button on the bottom and watch them go, where if I'm just showing you in a video, you'd have to wait till my next video. Literally, you can go back to the ones that I linked, which are a week old already, and see if they do what we're talking about. Okay, on the monthly, one thing I did darken. This is the anchored VWAP. I did anchor that. I'm talking about this pink line to, what would it be? I guess I've been saying December highs, but maybe they were in January. Start of the year is probably not a bad idea. Anyway, we've definitely been in a downtrend since then, but look at what's happened. We've broken this VWAP, retested it, failed. Broken the VWAP, retested it, failed. Tested it, failed. Broken through. Looks like on a weekly last week we did retest it. Interestingly enough, if you look at the low on this, 405, the VWAP's obviously moved a little bit since then because we started this week, but pretty close. I got some resistance right there. I redrew this triangle. I'm not totally bought in on it yet, but if this is a triangle, that's bullish, and it should break up, and it might, get up into these 430s and stuff that I'm talking about. I would say it would probably want to at least retest this high, about 417. So 420 is not out of the picture. I don't know. We'll see. I've seen some 430s thrown around, and I've seen some 390s. But right now, this chart also looks bullish on a weekly. I mean, look at the RSI climbing. The MACD is breaking over the signal. It looks pretty to me as far as a bull. If you're bullish, I should say. I'm indifferent right now because fundamentals do matter. A lot of stuff I'm seeing, like inverted yield curves, do matter. I don't know. It's an interesting situation, but the technical analysis of it, at these larger time frames, still looking kind of bullish to me. I did throw a red arrow in here just to identify last week's candle. That's the one we're talking about. It did end up being in the red, but it never pierced back down through, or didn't decidedly pierce back down through any of those areas we were talking about. So to me, that's a breakout retest. We'll see what happens. Now, sometimes they can wobble. Again, we've seen breakouts go higher and then come back down historically. So don't get your hopes up too high, but that's an interesting pattern to me. When I look at the daily, another interesting pattern. I'll back way out. You'll be like, you're crazy, man. Look at all these lines. I draw too many support and resistance lines. These are my working charts. I do use these to buy and sell what I buy, especially the longs. And this is historically old data. So it's been, as you can see, these lines were drawn from pre-COVID all the way up and then back down. So they float a little bit, but they are good support and resistance lines and have historically treated me very well. So with that being said, again, anchored VWAP at the top here. You can see the downward channel we're in, that we've challenged upsides and downsides many times with some throwovers. Right now I'm seeing momentum indicators pointing down. Now this is always that weird MACD where you go, I think it's gonna go down, but now it's flattening out. Well, let me get zoomed in a little bit on this. So again, we're on a daily. I've got a anchored VWAP, and that's only to last Monday. Oh no, I'm sorry. That does go back to the beginning here. So that's good. That's actually should be valuable. So on a daily, last Friday or last Thursday, actually last Wednesday, we started going down. We all the way down and tested that anchored VWAP. The next day we tested it and bounced. And here's today, right? So I find that pretty interesting. When I zoom out of the pattern a little bit, I go, is this a blow off top or is this a channel? And we just did a pullback. Okay, what does that mean for a pullback? Well, is that just a bull flag? Don't know yet. Don't know yet. To me, it looks like a lot of retesting going on there. Again, probably zooming around too fast for everybody. Sorry about that. I'm trying to get these videos shorter. Again, a lot of chop going on here. This is range bound. If you really think about it, 405 to, we'll say, 420. We've really just been range bound for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. So that goes all the way back to the last official Powell howl, which was the FOMC announcement. So interesting indeed. Now this is some shorter time frame for daily stuff. We don't talk about daily on the weekly video. I will talk about the VIX though. So on the VIX on a daily, you can see, sorry, I'm zooming around so much. You can see the VIX. This is a 5-day moving average, just so you know, on the daily. The VIX actually bottomed and looks to me like it's channeling up. That being said, you would think you'd get a SPY reversal, equity reversal. Look at this hammer candle it threw in on, or shooting star it threw in on Friday. So that's a big reversal candle to me. And then today when we gapped up and it ran down to close the gap, and then here we are pretty close to this. So I'm curious to see how this week plays out. If it doesn't fall back in this green channel, which sometimes I move this and say maybe it's an ascending wedge and it shouldn't be, you know, or maybe it is truly a channel. Just hard to say, frankly. Right now I'm going to leave it as a channel till it's telling me something different. Quick couple other things. Yield curves inverted. Here's the inversion line. 10 minus 3 months, 10 minus 2 inverted. Growth versus value. So this is growth. This is just a growth versus value indexing. So we grew, and then over the last week we chopped. But look at the 5 days starting to curl. So maybe growth is taking a pause, and we'll get some value back in there. I want a little SPY V, which is a value edition of the SPY. Is that a word? Anyway, what I'd like to say is I'd like to get some winners on that. Fed funds rate, I mean, they just, look at this. You'd think equities would respond. They're not. Advanced decline, I'll flip this to a weekly. So yeah, right now we got a lot of advancers. Last week, it looks like we had quite a few advancers, and we ended up with just a few. Get back to it daily. Some inflation stuff, but it doesn't update except for like monthly, so I won't get into that. You can see bond yields have been, so this is where I keep saying it's going up the ladder. So I've been laddering bonds personally, thinking that maybe the equity market is just not doing so smart things, and maybe the bond market is doing smart things. So I am going to diversify a little bit and ladder some bonds, which I actually have done already partially. Um, that being said, interestingly, mortgage rates are coming down as bonds go up, so treasury bonds, right? So it just perplexes me. But mortgage rates are a supply and demand item, right? Again, I'm a real estate guy. So even if the banks have to adjust their spread and don't make as much profit, it's competition. They want your loans, right? Uh, so my banker just asked me why I was selling off so much real estate. I'm like, hey, buy low, sell high, man. And feels like the real estate market to me is pretty tippy right now. Again, not a trade, no advice. Don't go out and sell your apartment building based on that. A lot of energy stuff going on. I won't get too far into this. Commodities, gold, I'll point out because it's an inflation hedge. Interesting that that's pulling back. Lumber again because in the buildings. That's dropping back down because it was starting to grind up again. Housing, look at housing increasing. Interesting. Is this a pullback or the end? To me, it looks like could be either yet. Banks on a daily here, almost the same pattern. So that's really what I have to say about some of this other things. So one thing I would like to point out, and again, this chart is available and I will link it, that you can follow it from before. Might not have some of my updated, like this, I would call it a bull flag. But I'm also kind of hoping financial conditions tighten so I can buy in cheaper into the SPY. So it's hard. I feel like a bull and a bear at the same time and buying bonds and holy cow, what's going on in the world? But this is inverted. So green is going down, red is going up. And I do that because I overlay the SPX, the S&P 500 on top of it because you can see it's historically followed financial conditions well. What I have noticed recently is, because of some of this concerns we've been having, I call these the jaws. I've heard other people call it. I didn't coin the term, but the jaws have widened and now they're starting to tighten. So eventually these should come back into correlation. Maybe they meet up here somewhere and then go down or maybe go up. Hard to say. But I did want to bring this chart up. I pretty much keep this chart in this layout just basically because of the inversion. So I start looking at other graphs and stuff on there. I'm like, why does that look wrong? Well, I forgot it was inverted. Anyway, I'm sorry this video went long. Again, please like and subscribe. I'm going to do these weekly and do some linking of some other stuff and continue to try to improve them. Maybe I'll cut some nonsense out of what those other charts I do or separate the video. Anyway, thanks again for watching.